I want to refer to standing order number 32 and request that the agenda term rings the quorum bell for the first 5 minutes. Honorable members, I'm trying to spot the whip, deputy whip, majority leader, deputy majority leader, but okay, I can see the chair of the majority leader is occupied. So would you confirm if you have quorum?
Thank you, Mr. Speaker. Mr. Speaker, we have a quorum. We can proceed.
Clerk, take us through the order of the day.
Third Assembly, second session. Order paper number 80 of today, Thursday, 8th June 2023 at 2:30 p.m. Order number 1, administration of oath.
Next order.
Order number 2, communication from the chair.
Honorable members, I want to welcome you to this session. And it has been brought to my attention that the honorable member, Honorable Seto Kumure, said yesterday that the speaker allowed members to vent on. But I'm informed that there was no determination made. And therefore, honorable members, I want to refer you to standing order number 41, that is part 10, statements, and 42. And if you look at the standing order, honorable members, there is a procedure in which statements are brought to the House. And the manner in which the statement was brought, I believe it was brought on starting order number 42 as personal statement, where by the indulgence of the House or the Speaker, the members may debate. Because the standing order said, and I want to quote, during statement hour, a member may, by the indulgence of the House, explain matters of personal nature, although there is no question before the House. But such matter may not be debated, which means it may be debated or not. So remember, by that, it's not possible to make a determination on that statement. And if there is need by members that it's of topical concern, then it should be brought in the right manner and with the prayers therein on what the plenary would make a resolution on. So I direct. Next order.
Order number 3, messages.
Next order.
Order number 4, petitions.
Next order.
Order number 5, papers.
Next order.
Order number 6, notices of motion.
Honorable Alice Wajeva.
Thank you, Mr. Speaker, sir. Pursuant to the provision of Standing Orders number 182(6) of the County Assembly of Kisumu Standing Orders, I wish to table today, Thursday, 8 June 2023, a report by Tourism, Wildlife, and Heritage Committee on their benchmarking exercise at Kisumu County Assembly.
I believe you are giving a notice.
No, Mr. Speaker. Papers you passed before I read.
I did ask for papers, but anyway, you've laid the paper. I
okay.
think.
Let me give the motion, a notice of motion.
No. Just bring the paper. Honorable members, I confirm receipt of the Committee on Tourism, Wildlife and Heritage report on benchmarking cases with Nakuru County Assembly, and I want to direct that the House Business Committee considers this report for purpose of scheduling for debate. Next order.
We are now in order number 6, notices of motion.
Honorable Alice Wajeva.
Thank you, Mr. Speaker, sir. Pursuant to the provision of Section 45(1), I wish to give a notice of motion that this House adopt the report of the Tourism, Wildlife, and Heritage Committee on their benchmarking exercise at Kisumu County Assembly, at Nakuru County Assembly. Thank you.
Next order.
Order number 7, statements.
It is statement time. Next order.
Commencement of business. Order number 8, motion on adoption of the report by PICPA Committee on the consideration of the Auditor General's report on the financial statements of the County Executive of Kisumu for the year ended 30th June 2020 by the Honorable Kennedy Ouko.
Honorable Kennedy Ken Ouko.
Thank you, Mr. Speaker. On behalf of the Public Accounts and Investment Committee, PICPAC, and pursuant to Kisumu County Assembly Standing Orders 188, I wish to present to this House the report of the committee on the audited financial statement of County Assembly of Kisumu, of County Government of Kisumu, financial year 2019-2020. The County Assembly of Kisumu, the County Assembly exercises oversight over county revenue and its expenditure pursuant to Article 185(3) of the Constitution of Kenya 2010 through the Public Accounts and Investment Committee, which in turn derives its mandate from the County Assembly standing orders. It is instructive that Article 229(8) of the Constitution of Kenya 2010 requires the County Assembly within 3 months after receiving the audit report to debate, consider the report, and take appropriate action. The committee held a number of sittings during which it received both written and oral evidence from the accounting officer on audit queries raised by the Auditor General. Minutes of the committee meeting is annexed to this report. A major challenge that the committee encountered from time to time is the high level of unpreparedness on the part of management. In many occasions, the management requested the extension of timeline for submission of responses. In addition, committee had no fund as at the time of culmination of this report. The Office of the Auditor General continues to highlight cases of questionable expenditure of public fund in its annual report. There is, however, a real risk of reducing this serious contribution by the OAG into mere ritual if no action is taken on these findings. The committee has therefore, upon careful evaluation of evidence before it, taken pragmatic steps by holding to account individual officers for their various acts of omission or commission that occasion loss of public fund. In some cases, the committee had invoked the provisions of Article 226(5) of the Constitution of Kenya 2010 and recommended that the concerned officers make good the losses that have risen under their watch. However, Honorable Speaker, I wish to register my appreciation to the following members, to fellow honorable members of the committee, the Office of the Speaker, the Clerk of the Assembly, and the Clerk of the Assembly, Committee Secretariat, and the Office of the Auditor General for facilitation and technical support that made the production of this report possible. Special appreciation goes to National Democratic Institute, NDI, for their financial support during the entire period of culmination of this report. Honorable Speaker, on behalf of the Public Accounts and Investment Committee, I now wish to table the report on the consideration of Auditor General's report on the financial statement of the County Executive of Kisumu for the year ended 30th June 2020, and urge this House to adopt it. One, as establishment and mandate of the Public Accounts and Investment Committee. On Speaker, the Public Accounts and Investment Committee is established under Standing Order number 188 of the Kisumu County Assembly Standing Orders and is mandated to undertake the following functions. One, examination of the accounts showing the appropriation of sum voted by the County Assembly to meet the public expenditure and of such other accounts laid before the House on the committee as the committee may think fit. Two, examination of the working of the public investment. Three, examine the report and accounts of the public accounts, public investment. Four, examine in the context of the autonomy of the efficiency of the public investment, whether the affairs of the public investment are being managed in accordance with the sound financial and business principles and prudent commercial practice. Composition of the Public Investment Committee, Accounts and Investment Committee. The committee currently is constituted comprises of the following honorable members: on Ken Ouko as chair, on Geoffrey Warindu as vice, on Mildred Ajumba, on Seth Okumu, on Nancy Matara, on Ruben Rakwach, on Zakaria Okoyo, on James Were, on James Omolo. Secretariat was also with us, Austin Ochieng, committee clerk, Crispin Oguta, clerk assistant, CPA Nabo Thodero, internal auditor, Geoffrey Omolo, fiscal analyst, Bill Otieno, legal counsel, Faith Judith, Sergeant Atam, Rafael Juma, research, Wycliffe Owade as research. Legal framework and guideline principles. Legal framework on speaker. The committee was guided by the following legal instruments. Constitution of Kenya 2010. Article 229 of the Constitution of Kenya 2010 requires the Auditor General within a period of 6 months after the end of each financial year to audit and report in respect of the financial year on 1, the accounts of the national and county governments, 2, the accounts of all funds and authorities of the national and county governments. The Constitution further indicates that all aspects of public finance shall be guided by the following principles. 1, openness and accountability, including public participation in financial matters, that the public finance system shall promote an equitable society in particular. The burden of taxation shall be shared fairly. Revenue raised nationally shall be shared equally among national and county governments. That expenditure shall promote equitable development of the county, including by making special provision for marginalized groups and areas. 3, the burden and benefits of the use of resources and public borrowing shall be shared equally between present and future generations. 4, public money shall be used in prudence and responsible way. 5, financial management shall be responsible and fiscal reporting shall be clear. The committee also relied on Article 226 of the Constitution of Kenya 2010, which provides that if the holder of the office, including the political office, directs or approves the use of public fund contrary to law or instructions, the person is liable for any loss arising from that use and shall make good the loss, whether the person remains in the holder of the office or not. Public Audit Act 2015, Section 7 mandates the Auditor General to 1, give assurance on the effectiveness and internal control, risk management, overall governance of the national and county governments. 2, undertake audit activities in the state organs and public entities to confirm whether or not public money has been applied lawfully in the effective way. Mr. Speaker, Section 149 of the Public Finance Management Act 2012 outlines the responsibilities of a accounting officer for the county government and the county assemblies, and it categorically states that an accounting officer is accountable to the county assembly for ensuring that the resources of the entity for which the officer is designated are used in a way that is lawful and authorized, and effective and efficient, economical and transparent. The Act primarily provides for the effective management of public finances by the national and county government, the oversight responsibility of Parliament and the county assemblies, the different responsibilities of government entities and other bodies. Mr. Speaker, emphasizes that the Section 3 of the PMF Act 2012 emphasizes on the need for upholding the fiscal responsibility principles. These principles are to be observed in both the national and county level of government. The Act further mandates the county accounting officer to monitor, evaluate, and oversee the management of their public finances. Section 156 of the PFM Act 2012 provide for circumstances under which a public or accounting officer may engage in improper financial conduct to include, but not limited to, undermining any financial management procedures or controls, making or permitting an expenditure that is unlawful or has not been properly authorized by the entity concerned. Failing without reasonable cause to pay eligible and approved bills promptly in circumstances where funds are provided for, or contravening the PFM Act or any other law. Mr. Speaker, Public Procurement and Asset Disposal Act 2015, this act primarily seeks to give effect to the Article 227 of the Constitution of Kenya 2010 to provide procedures for efficient public procurement and for asset disposal by public entity. The disposal and procurement process ought to be transparent, accountable, and cost-effective. On Speaker, in this report, the committee has applied Article 226(5) of the Constitution of Kenya 2010, Section 156 of the Public Finance Management Act 2012, to make various recommendations as indicated in the report. Guiding principles. On Speaker, in the execution of the mandate of the committee was guided by core constitutional and statutory principles on public finance management. These principles include the following: constitutional principles on public finance. Article 201 of the Constitution of Kenya 2010 provides for the fundamental principles aimed at guiding all aspects of public finance. It states that the principles are inter alia: 1, openness and accountability, including public participation in financial matters. 2, public money shall be used in prudent and responsible way. 3, financial management shall be responsible and fiscal reporting shall be clear. Obligation of the accounting officer. Article 262(2) of the Constitution of Kenya 2010, which provides that the accounting officer of the national public entity is accountable to the National Assembly for its financial management, and the accounting officer of the county public entity is accountable to the county assembly for its financial management. 2, Section 149(1) of the Public Finance Management Act 2012 provides that an accounting officer is accountable to county assembly for ensuring that the resources of the entity for which the officer is designated are used in a way that is 1, lawful and authorized, 2, effective, efficient, and transparent. These provisions obligate all the accounting officers to appear before the Public Accounts and Investment Committee to respond to audit queries raised by the Auditor General, the Office of the Auditor General. 3, direct personal liability. Article 226(5) of the Constitution is unequivocal that if the holder of the public office or political office or directs or approves the use of public fund contrary to the law or instructions, the person is liable for any loss arising from that use and shall make good the loss, whether the person remains the office holder or not. In the same spirit, Section 203(1) of the Public Finance Management Act 2012 enacts that public officer is personally liable for any loss sustained by a county government and is attributed to 1, the fraudulent or corrupt conduct or negligence of the officer, or 2, the officer is having done any act prohibited by the Section 196, 197, and 198. The committee considers these legal provisions as the basis for holding accounting and public officers directly and personally liable to any loss of public fund that may occur under their watch. Mr. Speaker, a report of the Auditor General that is now on financial accounting, that is what we are doing now. Honorable Speaker, Mr. Wilson Abiero the accounting officer appeared before the committee on 13th February 2023 to adduce evidence on the audited financial statement of the county executive of Kisumu for the year ended 30 June 2020. The minutes and the submission from the accounting officer are annexed on this report. The following officials accompanied him. 1, Wilson Abiero came here. 2, Kezia, who is the acting chief officer of finance. Kezia Okoth, acting director accounting services. Geoffrey Gienya, director internal audit. Philip Adundo, chief officer strategy and policy and service delivery. Joan Kanjejo, director supply chain management. Dominic Oluoch, internal auditor. Kungu J. Otieno, director revenue. Reverend B. Ouko, budget officer, Department of Agriculture, Livestock, Fishery Development. The following officers represented the Office of the Auditor General: Samuel Chege and Kennedy Oenga. Basis for the advice opinion on Speaker. The opinion of the Auditor General on the financial statement of Kisumu County Executive for the year ended 30th June 2020 was informed by the following. 1, inaccuracies in financial statement. On Speaker, the Auditor General observed inaccuracies in the financial statements and noted that the statements of the receipt and payment reflected various receipts balances which were at variance with several balances as per the IFMIS miscellaneous receipts report MRR in abbreviation, resulting to an explained net difference of 1,690,153,373, as shown below. You can see from there's receipts, money released from the exchequer, 7,544,172,968. And from the IFMIS, it is 6,310,317,213. The difference is 1,512,855,755. Then now we have the county-owned generated receipts. We have 811,124. But in the IFMIS, it is showing 987,654,256. You can see the difference now, 176,578,172. Transfer from other governments, 553,875,750,000. The IFMIS, it was not recording. I think we'll explain down there. Now, when you look at the total, it is 800, the statements, 8,809,124,842. Against 7,971,469 Kenya shillings. Further, the statement of the receipts and payment reflected total receipts of 8,732,502,114. However, the Controller of Budget Implementation Review Report for 2019-2020 reflected actual total receipt balance of 10,218,772,502 532, resulting to an explained variance of 1,485,274, 475,274,418 between the two reports. In addition, the Exchequer releases of 7,544,172,968 included an amount of 102,790,158 for universal health care and agriculture sector development support project, ASDSP. However, the management did not provide the disbursement schedule to support the balance. Management response. Mr. Speaker, in the response to the foregoing issues on inaccuracies in the financial statement, the county government management, through the accounting officer, indicated that the variance between financial statement and IFMIS miscellaneous receipts report arose due to system challenges faced in posting of data, which they indicated to have been escalated to National Treasury for support. They responded that they relied on the report to prepare the financial statement due to inadequacy of data from IFMIS. Further to the response, the management also indicated that the Controller of Budget Implementation Report captured balances brought forward from the previous financial year 2018-2019 of Kenya shillings 1,524,076,529 that had already been reported in financial statement on financial year 2018-2019. That is what caused the variance. The disbursement schedule to support agriculture development support program was availed. Expected disbursement was 17,029,227 Kenya shillings. But Kenya 11,264,613 was received. The universal health care receipt of 91,525,525 was balanced for the financial year 2018-2019. During the financial year 2018-2019, expected disbursement was 276,576,632 hundreds, but Kenya shillings 182,051,090 was received, leaving a balance of 91,525,502. Committee deliberations and observations. Honorable Speaker, during joint committee deliberations and interrogations, in the company officers from the Office of Auditor General and the accounting officers, the committee observed the following in regard to this audit and queries, and the management response. The management in their response indicated that the Controller of Budget Implementation Report balance brought forward from the financial year 2018-2019 of Kenya shillings 1,524,076,529 that had already been reported in the financial statement of 2018-2019. However, according to the auditors, there was no reconciliation provided to support the same during the time of audit. No disbursement schedule was provided to support the receipt of 91,525,525 for the universal health care. It was noted that the Office of the Auditor General, by the Office of the Auditor General, that despite the management indicated that they had requested for vote book management system configuration from the National Treasury, there was no status or progress report on the same as at the time of deliberations. committee recommendations. Based on the absence of schedule for the universal health care to support the receipt of Kenya shillings 91,525,525 and status report on vote book management system configuration from the National Treasury, the committee recommend to the House to resolve as follows: that the accounting officer submit to this assembly the disbursement schedule to support the receipt of 91,525,525 for the universal health care in a period of not more than 90 days upon adoption of this report. That in future, the chief officer, accounting officer, must ensure proper reconciliation to ensure that there is agreement between the figures in the financial statement and the IFMIS system, that this matter and issue remain unresolved. Unsupported county-owned generated receipts. On Speaker, the Auditor General observed that, as disclosed in Note 9 to the financial statement, the statement of the receipts and payment reflect county-owned generated receipts of Kenya shillings 811,076,124 Kenya shillings. The balance include payroll revenue surcharge of 6,228,243 shillings that was not supported with the details, schedules of employees' deductions. Revenue totaling to 5,886,736 collected by Maseno Agriculture Training Center was not remitted to the County Revenue Fund, CRF account, as per the requirement of Section 80 and 81 of the Public Finance Management Regulations 2015, which states that all revenue collected by the county assemblies, all revenue collected by the county government should be remitted to the CRF account. Further, out of total collection of 5,886,736, it was noted that 4,328,198 shillings was spent on source, and no approval and documentation was provided during audit to support the expenditure. In the circumstances, the accuracy of county-owned generated receipts amounting to 811,076,124 Kenya shillings in the financial statement could not be confirmed. Management response. Honorable Speaker, the management of the county government, that is now the executive, responded that the county government of Kisumu Department of Agriculture, Livestock and Fishery maintained a bank account named Maseno ATC DFF with the Kenya Commercial Bank account number 1149353928. The Maseno Agricultural Training Center ATC was running this account for a fund referred to as Demonstration Farms Fund, DFF, for revenue collection before the advert of devolution to provide resources for development and running of the commercial activities, that is now the enterprises, on the revolving basis. The fund was established by the Exchequer and Audit Act, Cap 412 Laws of Kenya, through the legal notice number 456 of 16th November 1990. This continued until the financial year 2019-2020, when the use of the account for the demonstration farms fund purpose was stopped, since the legal notice is yet to be reviewed and realigned to fit into the devolved government system. However, this action has greatly constrained the revenue regeneration capacity of the institution. Consequently, the account was used as operation account for Big NAG, Vic Aqua Fish Project An EU-funded project, a copy of the letter authorizing the use of account as operational appended herein, refer NAF/COALF Kisumu GC/DEF 8B/3 was attached. Further, the County Executive Committee member for Finance and Economic Planning was at that time working as on establishing an agricultural facility financing fund to support the day-to-day cash need of Maseno ATC and other revenue generating institutions in the County Department of Agriculture, Livestock, Fisheries, and Irrigation to enhance services delivery. A scheduled employee payroll surcharge deduction was attached. Committee observations. On Speaker, the following observations were made in regard to this issue. According to the Office of the Auditor General, the payroll surcharge deduction was sufficiently supported by IPPD generated record on other authenticated records. The supporting documents were provided later and not during the time of audit. There was no response on the revenue that was spent at source. Similarly, there was no evidence of subsequent transfer to the county revenue fund. The committee observed that a letter referred DALF/COALF/Kisumu/GC/FIN6 volume 1 dated 28th January 2021 was written to the branch manager KCB Kisumu branch to transfer all the funds held in account number 114845 1196 to County Revenue Fund, account number 11441991705. That's a different account. However, the committee could not establish whether the subsequent collections in that account are being transferred to the County Revenue Fund account as required by Section 80 and 81 of the PFM Regulations 2015. Committee recommendations. On Speaker, the committee recommended to this House to resolve as follows: that the accounting officer submit to this House within a period of 90 days upon adoption of this report a comprehensive report on the annual own source revenue collected by Maseno ATC for the financial year 2019-2020. B, measures that they have put in place to ensure that all subsequent revenue collected are remitted to County Revenue Fund account as per Section 80, 81, and 81 of the Public Finance Management Regulations 2015. That the accounting officer submit financial statement for the financial year 2021, 2020, 2021, and 2021-2022 relating to all the agricultural training centers within Kisumu County to the Office of the Auditor General in a period of not more than 90 days upon adoption of this report for a special audit. That the Chief Officer Finance automates own source revenue collection due to all the agriculture training centers within the country before the end of financial year 2023-2024, and a report on the automation be submitted to this assembly. That is, that this issue remain unresolved. Unreturned fund to CRF account. On Speaker, the Auditor General observed that as disclosed in Note 10 of the financial statements, the statements of the receipt and payment reflect returned Country Revenue Fund CRF issue of 24,377,272, which were transferred from development recurrent account at the Central Bank of Kenya. However, the balance exclude impress and operations accounts that were holding a total balance of 4,229,013 at the end of the previous year, which had not been transferred to CRF account. Further, the transfer of 24,377,272 were done on 7th August 2019. Consequently, the accuracy and completeness of the receipts of 24,377,272 reflected as a returned country refund fund issue in the statement of the receipt and payment for the year ended 2030 June 2020 will not be confirmed. Management response. Mr. Speaker, the management responded that there were commitments made in financial year 2019-2020 and therefore were paid in subsequent financial year and hence could not be transferred to county revenue fund account. Committee observations. On Speaker, during the deliberations and analysis of the responses on this audit issue, the committee made the following observations. 1, the committee observed that the transfer disclosures were made in August 2019, which was just 1 month into the new financial year 2019-2020, and that could not account for transfer which ought to have been made after the end of financial year ended 30th June 2020. 2, the payment voucher that were attached relates to activity which took place way before the close of financial year, which could have been paid within a financial year. 3, the management failed to adhere to the cut-off procedures in case of unpaid commitment as per National Treasury guidelines. 4, the balance of Kenya shillings 4,229,013 relating to impress and the operation account was not sufficiently reconciled and explained. 5, the committee noted that despite the management indicating that they had committed all the fund, including the Kenya shillings 229,013 relating to impress and operations account, it was against accounting standard and practice to commit impress and operations account. 6, nevertheless, the management failed to provide any evidence of any such commitment as alleged. Committee recommendations. On Speaker, based on the following observation, the committee recommended that in future, the Chief Officer Finance must ensure that all accounting processes are undertaken through the IFMIS system. That in future, the management must ensure that unspent money are returned back to county revenue fund account. That this matter remain unresolved. Compensation of employees. On Speaker, the Auditor General observed that, as disclosed in Note 11 to the financial statements, the statements of receipts and payment reflect compensation of employees, balance of Kenya shillings 4,461,475,456 hundreds. The balance includes pension, and other social security contributions amounting to 41,286,470. However, supporting documents provided for review indicated a total of 235,536,988 was spent on pension and social contribution, resulting to variance of 194,250,518. Management has explained that the difference had been included in the basic salaries of permanent employees. Balance this, okay. The management had explained that the difference had been included in the basic salaries of permanent employees balance. This misposting had not been corrected. Further, the balance include basic wages of temporary employees, balance of 129,674,986 Kenya shillings. However, payment amounting to 865,802 Kenya shillings were not supported with the payment voucher, schedule of payees, approvals, and support for work done, including personal allowances paid as part of the salary, amounting to 1,594,196,492 Kenya shillings. However, review of the document indicated that the balance constitute an amount of 16,402,366 paid to County Public Service Board members as sitting allowances, traveling allowances, and airtime and return allowance. However, management did not avail supporting documents such as an invitation letter, schedule, or agenda of the meeting, as well as the signed attendance sheet. The amount of 16,402,366 also includes 1,235,062 paid as honoraria to employees, the basis of which was not explained or supported. Consequently, the accuracy, validity, completeness of the Kenya shillings 4,261,470 1,461,475,556 spent on compensation of employees in the statement of receipts and payment for the year ended 30 June 2020 could not be confirmed. Management response. During the financial year under review, the county government budgeted for pension and other social security contribution was under budgeted and leading to other payments under the basic salaries being charged under the vote on pension and social security contributions, resulting into variance reported by the auditor. However, the management indicated that the same had been rectified and subsequent financial statement had demonstrated the same rectification. Committee observations. On Speaker, the committee made the following observation on this particular audit issue. The management failed to provide explanation on unsupported expenditure of 8,865,802 and Kenya shillings 16,402,366 respectively. Supporting documents on casual attached to the management response only amounted to 3,595,300, thus leaving an unsupported payment to temporary employees of 5,268,502. The management failed to provide the relevant documents supporting the expenditure for the 16,402,366 relating to sitting allowances, traveling allowances, airtime, return allowance to members of the County Public Service Board. That the management failed to provide the voucher schedule for payees, approvals, and support for work done to support the expenditure amounting to 8,865,802 as highlighted by the Auditor General. That the total unsupported expenditure amounted to 21,670,868, comprising 5,268,502 illegally allegedly paid to temporary employees but could not be supported, and 16,402,366, including 1,235,000 and 62 paid as honoraria to employees relating to sitting allowances, traveling allowances, airtime, return allowance to members of the County Public Service Board, all of which could not be supported. Committee recommendations. On Speaker, based on the following findings, the committee recommended the following: that the accounting officer, finance, economic planning submit to this assembly supporting documents for payments amounting to 5,268,502 related to basic wages of temporary employees, and relevant documents to support payment amounting to Kenya shillings 16,402,366 Kenya shillings, including 1,235,000 and 62 paid to honoraria to employees in a period of not more than 90 days upon adoption of this report. The failure by accounting officer to support the amount mentioned in one above within 90 days upon adoption of this report, the whole amount turned into irregular payment. That pursuant to Article 226(5) of the Constitution of Kenya 2010, which states that if the holder of the public office or a political office direct or approves the use of public fund contrary to the law or instructions, the person is liable for any loss arising from that use and shall make good the loss, whether the person remains the office holder or not. The County Executive Committee member for Finance, Economic Planning, and ICT, after a lapse of 90 days, immediately initiate the recovery of 16,402,366 and 5,268,502 from the then Chief Officer of Public Service Board and the then Chief Officer, Finance and Economic Planning, respectively. A report on the progress be submitted to this assembly, that this matter remain unresolved. Use of goods and services. Honorable Speaker, the Auditor General noted that in Note 12 to the financial statement, the statement of the receipts and payment reflected use of goods and services, Kenya shillings 995,424,701 shillings. The following observations were made and supported payments. The balance include several balances amounting to 10,135,479. That was not supported with the relevant document as tabulated below. You can see the fuel, oil, lubricants at 3,638,239. No supportive document, invoice, no invoice, work ticket, no receipt, payment vouchers. Other operating expenses at 2,828,440, no invoice, no payment vouchers, no receipts. Routine maintenance of the assets at 2 million, no supporting document. 4, routine maintenance of vehicle and other transport equipment at 1,668,800, no invoice, no payment vouchers, no receipt. It cost 10,135,447. Management response. Honorable Speaker, on unsupported payments highlighted in the table above, the management responded that the county government did not have the requisite documents at the time of audit because they were in the archive at that time. They, however, indicated that the same had been provided to auditors for verification at the time of committee deliberations on this matter. Committee Observations on Speaker. The committee made the following observation on this matter: that the management failed to provide supporting documents on 10,135,479 under the use of goods and services during the time of audit. 2, the committee noted that without supporting document referenced in this matter, there were possible direct loss of 10,135,479 of the public fund. That despite the accounting officer's submission that the supporting documents had been provided to the audit review at the time of committee deliberations on this matter, the officers from the Office of the Auditor General disputed and indicated that the documents were yet to be provided for audit review. That the committee find that, contrary to section 27(3) F and G of the County Assembly Powers and Privileges Act 2017, the management, that is the chief officer, willfully lied to and misled the committee on the provisions of required document for audit. 5, the committee find that the county government of Kisumu does not have a policy on record management. Committee recommendations. Mr. Speaker, the committee recommended to this House to resolve as follows: that the accounting officer, finance and economic planning submit to this assembly the supporting document for payments of amounting to 10,135,479 in a period of not more than 14 days upon adoption of this report. 2, that failure by the chief officer, finance and economic planning to comply with the recommendation 1, the payments turn to irregular payments. 3, that pursuant to Article 226(5) of the Constitution of Kenya 2010, which states that if the holder of the office of a political, the holder of the public office or political office direct or approve the use of public fund contrary to law or instructions, the person is liable for any loss arising from the use and shall make good the loss. However, the person remains the office holder. Whether the person remains the office holder or not, the county executive committee member for finance and economic planning, after a lapse of 14 days, immediately initiates the recovery of 10,135,479 from the then accounting officer who authorized the unsupported payments and report on the progress he submitted to the assembly. 4, that in order to ensure safekeeping of government records and documents and adherence to section 17(3) of the Access to Information Act 2016, the county secretary formulates the Kisumu County Record Management Policy and submit the same to the county assembly within 90 days upon adoption of this report. That this issue remain unresolved. Irregular insurance cost. On Speaker, still on the use of goods and services, the Auditor General observed irregular insurance cost whose balance include an amount of 63,855,265,000 in respect of insurance costs. The review of the insurance record revealed that the management did not provide policy documents, quotations, records to show how the service providers was sourced for payment totaling to 4,716,395. B, an insurance agent was engaged to facilitate covers for 4 motor vehicles at a cost of 955,975 on 29th November 2019. However, the certificate of insurance copy attached to the payment indicated that the cover commencement date was 21st January 2019, 10 months earlier. C, the debit note number 9875 for premium cover amounting to 5,123,000 and 98 listed 21 vehicles that were covered. However, only 16 vehicles insurance certificate were provided to support the payment. There were no evidence that the 5 vehicles were covered. A debit note 9876 for premium cover amounting to 1,931,630 indicated that 39 vehicles were covered. However, 3 of the vehicles had already been included in the earlier debit, which I read, 9875 above. Debit note 9877 for Kenya shillings, 2,028,539 indicated insurance for various vehicles, but there were no list of the vehicles for which the premium was paid, and that 6 debit notes with cumulative premium value of 1,084,060 were not supported with copies of certificate of insurance. Management response. On the issue of provisional policy document, quotation and record to show how the service providers were provided for insurance, were sourced for insurance payment amounting to Kenya shillings 4,716,394. The management responded that the payments were supported by the request for quotation, opening and evaluation minutes, including award and acceptance letters. On the issue of the dating of the certificate of insurance copy that was attached to the payment, which indicated that the cover commencement date was 21st January 2019, 10 months earlier, the management indicated that this was a typing error in the dating of the award letter. On the issue of debit note 9875 for the premium cover amounting to Kenya shillings 500,123,029, which listed 21 vehicles that were covered, but only 16 vehicle insurance certificates were provided to support the payment. No evidence that other 5 vehicles were covered. The management responded that they had therefore attached the 5 certificates for the auditor's review as the time of committee review and deliberations on the matter. D, the issue of debit. The issue of debit number 9876 for premium cover amounting to 1,931,630, which indicated that 39 vehicles were covered, but 3 of the vehicles were already excluded in the earlier debit note number 9875. The management responded that the county government initiated the recovery of the amount overpaid to correct the error. E, on the issue of debit number 9877 for Kenya shillings 2,028,539, which indicated insurance for various vehicles, but there were no list of vehicles for which the premium was paid, and that 6 debit and 6 debit notes with a cumulative premium value of 1,084,060 were not supported with copies of certificate of insurance. The management responded that they had provided us at the time of committee deliberation on this matter copies of the certificate of insurance for review. Committee observations. Honorable Speaker, each of these issues raised under irregular insurance cost. The committee considered and makes the following observations. 1, on the issue of provisional policy documents, quotations, and record to show how the service providers were sourced for insurance payment amounting to 4,716,395, to which the management responded that the payments were supported by the request for quotation, opening and evaluation minutes, including award acceptance letter. The committee observed that the supporting documents with respect to the payment of 4,716,395 for insurance costs were provided to the auditors as indicated by the management. However, these were not provided at the time of the audit. B, on the issue of dating of the certificate of insurance copy, that was attached the payment, which indicated that the cost commencement date, the cover commencement date was 21st January 2019, 10 months earlier, to which the management indicated that this was a typing error in the date of the award letter. The committee observed that the alleged typing error could not be substantiated by the management. On the issue of the debit note, number 9875 for the premium cover amounting to 5,123,098 and 98 shillings, which listed 21 vehicles that were covered, but only 16 vehicles. Vehicle insurance certificates were provided to support the payment, and that there was no evidence that the other 5 vehicles were covered, to which the management responded that they had therefore attached the 5 certificates for the auditor's review at the time of committee review and deliberations on the matter. The committee observed that the management failed to provide insurance certificate for 5 vehicles during the time of audit, contrary to provisions of section 62(1)(b)(c) of the Public Audit Act 2015 on timely provision of documents and evidence for purpose of audit. D, on the issue of debit note number 9876 for the premium cover amounting to Kenya shillings 1,931,630, which indicated that 39 vehicles were covered, but 3 of the vehicles were already excluded in an earlier debit of number 9897, to which the management responded that the county government had initiated the recovery of the amount and overpaid to correct the error noted. The committee noted that the letter initiating refund of the overpayment was dated 3rd March 2023, 6 days before the accounting officer appeared before the committee. The letter also had no evidence that it was received by the insurance company. The purported letter was therefore to hoodwink the Assembly Committee. E, on the issue of debit note number 9877 for Kenya shillings 2,028,539, which indicated insurance for various vehicles, but there were no list of the vehicle for which the premium was paid, and that 6 debit notes with cumulative premium value of 1,084,006 were not supported with copies of certificate of insurance, to which the management responded that they had provided, as at the time of committee deliberations on this matter, copies of the certificate of insurance for audit review. The committee found that the management indeed provided an insurance certificate for audit review. This was confirmed by the auditor. Committee recommendations. Honorable Speaker, based on the foregoing findings and observations, the committee makes the following recommendations on each of the audit issue under irregular insurance cost. 1, on the issue of provision of policy document, quotation and record to show how to how the service providers were sourced to insurance payment amounting to Kenya shillings 4,716,394, to which the management responded that the payments were supported by the request from the quotation, opening and evaluation minutes, including award and acceptance letters, to which the committee observed that the supporting document with respect to the payment of Kenya shillings 4,716,395 for insurance costs were provided for the auditors, as indicated by the management. 1, the committee recommended that this issue is resolved, since the management provided the requisite document in support of the insurance cost. 2, on the issue of the dating of the certificate of insurance copy that was attached to the payment, which indicated that the cover commencement date was January 2019, 10 months earlier, to which the management indicated that this was a typo error in the dating of the award letters, and to which the committee observed that the alleged typing error could not be substantiated by the management. The committee recommended that the audit issue is resolved. The committee further recommended that county executive committee member initiate an internal investigation on possible loss of fund that may have caused the typing error, and report to this House within a period of 90 days upon adoption of this report. On the issue of debit number 9875 for premium cover amounting to Kenya shillings 5,123,098, which listed 21 vehicles that were covered, but only 16 vehicles insurance certificates were provided to support the payment. The committee noted that the time of audit, there was no evidence that the other 5 vehicles were covered. The management responded that they had provided for certificate for the auditor's review at the time of committee deliberations. 1, the committee recommended that this matter is resolved since the insurance certificate had been provided. Nonetheless, despite the later provision therein. 2, the committee further recommended that going forward, the management must adhere to section 62(1)(c) of the Public Audit Act 2015 that requires timely provision of information during the time of audit. 3, the issue of debit number 9876 for premium cover amounting to 1,931,630, which indicated that 39 vehicles were covered, but 3 of the vehicles were already included in earlier debit number 9875, to which the management responded that the county government initiated the recovery of the unpaid correct and paid to correct the error, and noted that which the committee noted that the management did not provide evidence of the above said recovery, nor evidence of any such process that had been initiated. 1, that the accounting officer, finance and economic planning submit evidence of recovery of amount for the insurance of the vehicle, 3 vehicles within 4 days upon adoption of this report, 14 days upon adoption of this report. That failure by the accounting officer finance to submit the evidence of recovery within 14 days upon the adoption of the report, pursuant to Article 226(5) of the Constitution of Kenya 2010, which states that if the whole of the office or political office direct or approves the use of public fund contrary to the law or instructions, the person is liable for any loss arising from that use and shall make good the loss. However, the person remain, the office holder or not, the county executive committee member for finance and economic planning initiates the recovery of the amount due to the relevant accounting officer who authorized irregular insurance expenditure, and evidence of the said recovery be submitted to this assembly within 90 days upon the adoption of this report. The committee resolved that this matter remain unresolved. On the issue of debit number 9877 for Kenya shillings 2,028,538, which indicates insurance for various vehicles, but there was no list of the vehicle for which the premium was paid, and that 6 of the debit notes with a cumulative premium value at 1,084,060 were not supported with copies of certificate insurance to the Committee of Insurance to committee deliberations on this matter. Copies of the certificate of insurance for the audit review, and for which the committee found that the management indeed availed the insurance certificate for audit verification. The committee recommends that this matter is resolved since the insurance certificate were indeed provided and verified by the auditors. Misclassifications of those domestic travel and subsistence expenses. Honorable Speaker, The Auditor General observed that that still under a use of goods and services, the balance constituted an amount of Kenya shillings 168,085,896 in respect to domestic travel and subsistence, which include a payment of 641,439 to travel agents for purchase of air ticket that was misclassified as domestic travel and subsistence. Management response. The management responded that the expenditure was incurred to facilitate the governor travel to USA for United States of America for official meeting. However, there was no vote in the foreign travel. Committee observation. The committee noted that the foreign travel was charged on domestic travel vote without requisite regularization by the County Assembly through the supplementary budget. The committee notes that the management violated Article 223 of the Constitution of Kenya 2010 that requires approval of the Assembly for such expenditure. Committee recommendations that the issue is resolved, that in future, the accounting officer must ensure compliance with provisions of Article 223 of the Constitution of Kenya 2010, irregular travel and subsistence expenses. Honorable Speaker, under use of goods and services, the Auditor General also observed irregular foreign travel and subsistence expenses in which it was noted that the balance constitutes an amount of 31,181,077 in respect to the foreign travel, which include payment of 4,774,172 being shipping charges for the hyacinth harvester donated by the Indian government on 19th May 2020, which does not relate to foreign travel. Further, management did not provide supporting document showing the provider was sourced to undertake the clearing services and whether this cost had been factored in budget and the procurement plan. The machine had also not been received at the time of payment. Consequently, the accuracy, completeness, and validity of the expenditure amounting to 995,424 995,424,701 under use of goods and services reflected in the statement of receipts and payment for the year ended 30 June 2020 could not be confirmed. Management response. The management responded that the auditor's observation was true, that the government did not plan for it in the budget, nor in the procurement plan. But the county government of Kisumu was in need of the hyacinth harvester machine, which Indian government offered to donate. The donation was not anticipated as would normally occur, but it was a condition of the donation that shipping charges of Kenya shillings 4,774,172 be paid before the machine is released, and the county government had to comply or risk losing the machine, the donation. Committee observations. Honorable Speaker, despite the explanation of the need for the said machine, the committee observed that the management failed to provide document to support 4,774,172 in respect to the shipping charges during the time of audit. Two, there was no evidence of cabinet approval and county assembly supplementary regularization of the expenditure. Three, the management failed to provide supporting documents showing how the service provider was sourced to undertake the clearing services and whether this cost had been factored in budget and the procurement plan. Committee recommendations. Due to the apparent lack of supporting document for the amount of 172 that relate to shipping charges for the machine in question up to and until the time of committee deliberations, the committee recommended the following: that the accounting officer submit to this assembly supporting documents showing how the service provider was sourced to undertake the clearing services and whether this cost had been factored in the budget and procurement plan within a period of 90 days upon approval of this report. That the accounting officer submit to this assembly all the supporting documents for the amount of Kenya shillings 4,774,172 that relate to shipping charges within a period of 90 days upon adoption of this report. 3, that in future, the accounting officer must ensure compliance with Article 223 of the Constitution of Kenya 2010, Section 132 of PFM Act 2012, and Regulations 39 of PM Act, County Governments, Regulations 2015, when incurring such expenditure, that this audit issue remain unresolved. Transfer to other government units. Honorable Speaker, the other audit issue raised by the Auditor General was on the matter of transfer to other government unit. The auditor noted that note 14 to the financial statement, the statements of receipts and payments reflect a balance of 1,755,555,843 in respect of the transfer to other government entity. However, the following observations were made. Misclassification of expenditure. The balance include payment to suppliers and contractors totaling to 237,259,339 for various works, goods, and services provided. It had been noted that the suppliers and contractors were not government agencies or entity established under the Public Finance Management Act. Public Finance Management and County Government Regulation Section 197, 1 and 201, which sets the guideline for establishing of a county fund and county corporations respectively. The payments should therefore have been classified as either use of goods and services or acquisition of assets, as opposed to the treating it as a transfer to other government unit in the county, in the circumstances. The finance statement are not fairly stated. Management respond that they did not, that they had never noted the observation of the auditor and the problem misclassifications had been corrected in the subsequent financial statement. Committee observation. The committee noted that despite a claim by the management to have noted the observation, the financial statement were not therefore fairly stated. Committee recommendations. In the circumstances, the committee recommends that the matter be resolved, that in future, the accounting officer must ensure that proper classification of expenditure is done to ensure their fair representation of the financial statement. Unsupported transfer to vocational training institutions. Honourable Speaker, under transfer to other government units, the auditor also noted that the balance included under other current transfer grants and subsidies transferred to various vocational training center amounting to 23,460,000 shillings. However, there were no acknowledgement letters from recipients or evidence for transfer of 18,760,000 to confirm that the institutions received the fund or expenditure return to ensure that the fund were utilized as planned. Consequently, the accuracy, validity, completeness of the expenditure amounting to 19,339 included in the transfer to other government units for the year ended 30th June 2020 could not be confirmed. Management response that the vocational institutions received the fund and utilized as planned. Evidence of the acknowledgement letters or transfer receipts from the vocational institutions were provided as follows in the table. Ahero VCT, Rotary VCT, Acado VCT, Ahero VCT, Ahero VCT, on different dates. 31st, with Ahero 5,370,000, Rotary 375, 3,750,000, that is on 31st December 2019. Acado 3,375,000. Ahero again 4,995,000. Acado, it was of different dates, 4,050,000. Ahero again 5,070,000. It totals 27,210,000 shillings. Committee observation. During the deliberations, the officers from the Office of the Auditor General indicated that the acknowledgement letters from the recipient and evidence for transfer of Kenya shillings 18,090,000 during the financial year 2019-2020 and 9,120,000 as of 1st July 2020 had been provided and confirmed. Committee recommendations. In the circumstances, the committee recommends that the matter is resolved. That in future, the management must ensure compliance with Section 21 of the Public Audit Act 2015, which gives the Auditor General the powers to timely obtain documents, information, or evidence in the possession of public officers or public bodies for purpose of audit. Acquisition of assets. Honorable Speaker, the Auditor General highlighted a number of audit issues under acquisition of assets, in which they observed that Note 17 of the financial statement, the statement of receipts and payment reflect a balance of 1,116,320,347 under acquisition of assets. The following observations were made. Under acquisition of assets, the auditor also noted the following amounts that were not supported. Purchase of trucks under purchase of trucks, under purchase of vehicles and other transport equipment, 32,250,000. Payments, vouchers, payment vouchers, procurement documents and other relevant records not provided. Purchase of photocopier, computer, and other equipment under purchase of office furniture and general equipment, 631,000, which payments, vouchers, procurement documents, other relevant documents not provided. Research studies, project preparations and designs worth 4,074,924. Payment vouchers, procurement documents and other relevant documents not provided. It totals to 36,955,929. The management responded that the county government did not submit the supporting document at the time of audit because they were in the archives, and that they had since been availed to auditors for verifications. Committee observation that the management failed to provide documents to support the amount of Kenya shillings 36,955,229, both during the time of audit and at the time of committee deliberations, contrary to management response. 2, that pursuant to section 27(3) D2(f) G of the Roman 2F and G of the County Assembly Powers and Privileges Act 2017, the accounting officer willfully lied to and misled the committee that despite not providing the document during the time of audit, they had provided them for verifications at the time of committee deliberations on the matter. 3, the accounting officer was under oath at the time of lying to the committee that the document had been submitted to the auditor, Office of the Auditor General. Committee recommendations that the accounting officer, finance and economic planning submit to the County Assembly through the Office of the Auditor General the document supporting the expenditure of the Kenya shillings 36,955,929 in a period of not more than 14 days upon adoption of this report. That failure by the accounting officer to submit the supporting document in 1 above by a copy of this report, the matter be automatically referred to the Ethics and Anti-Corruption Commission for further investigation for possible loss of public fund amounting to 36,955,229. 3, that the AG, Acting Chief Officer Finance, Economic Planning, Mr. Wilson Abiero, is hereby fined a total of 400,000 pursuant to section 27(4) of the County Assembly Powers and Privilege Act 2017 to be deducted from his monthly salary and allowances due to him effective the end of June 2023 for willfully misleading the committee on the provisions of the required documents for audit with reference to the unsupported documents of Kenya shillings 36,955,929. This section of the law provides that a person that commits such an offense is liable for a fine of not more than 500,000 or a term of imprisonment not exceeding 1 year, or both such fine and imprisonment. That this matter remain unresolved. That is the resolution of the committee. Irregular payments of, for renovations of Deputy Governor's house. On Speaker, the Auditor General noted that during the year under review, management spent 5 million shillings for the renovation of the Deputy Governor's house. However, the bill of quantities were not signed, had no preparation date, tender for references, and the contract agreement did not disclose the contract time frame and the contract amount. It was noted further that the work done under payment certificate number 1, dated 17th June 2019, amounting to 500 million, was not supported by inspections and acceptance report and letter of appointment of the inspection committee. There was no document provided to support certified work, and hence it was difficult to confirm the extent of the work, which were done while the tender advert, regret letters, and the procurement documents were not availed for audit review. Management respond. The information required by the auditor could not be responded to adequately because the file in question was among the file and documents burned at the Department of Lands and Housing, Physical Planning and Urban Development. Committee observations. The relevant document to support this issue raised by the auditor on the matter of renovation done were not provided for verifications. The management indicated that the supporting documents were banned. However, this could not be verified. There are several avenues through which the management could use to acquire the supporting document. It was observed that even if the documents were banned at the Department of Lands, Housing and Physical Planning, as alleged by the management, other copies of the said document could still be accessed from the Payment Department of Finance and Economic Planning or from the contractor. 5, The committee observed that this was just but an indication of apparent refusal by the management to provide the document for audit contrary to Section 21 of the Public Audit Act 2015. That the accounting officer of finance and economic planning violated Section 62.1 and Section 62.1b of the Public Audit of 2015, which states that a person shall not, without justification, fail to provide information required under the Act. Committee recommendations that the accounting officer provide the said documents, supporting document, from the Finance and Economic Planning Department within 14 days upon adoption of this report, failure to which he be held liable in line with Article 226(5) of the Constitution of Kenya 2010, which provide for a personal liability for accounting officer in case of loss of public fund. That failure to provide the document within 14 days of indicated above and pursuant to Section 226(5) of the Constitution of Kenya, officer of Kenya, Constitution of Kenya 2010, which stipulates that for direct personal liability for accounting officer in case of loss of public fund, the committee recommended that the county executive committee member for finance and economic planning initiate a recovery of 5 million spent on alleged renovation of then accounting officer from then accounting officer finance and economic planning who authorized the said expenditure, and a report on the same be submitted to the county assembly within 90 days upon adoption of this report, that the matter remain unresolved. Cash and cash equivalent. Honorable Speaker, the Auditor General observed that the statement of assets and liability reflect cash and cash equivalent balance of 1,890,870,360, which constitute a bank balance of Kenya shillings 1,890,819,760, and cash balance of 54,600, from which the following observations were made. As listed in Note 21A to the financial statement, the balance include bank balance of Kenya shillings 1,890,000 bank account. As listed in Note 21A to the financial statement, the balance include bank balance of 1,818,766, which comprises of 53 bank accounts balances. However, the cash book and bank reconciliations for 24 of the bank account totaling to 26,758,700 were not provided for audit review. The management responded that the observation by the auditor is true. However, the situation had changed and all the cash books and bank reconciliations for the subsequent financial year had been provided for audit review as reported. The committee observed that the management failed to provide the cash book and reconciliations that were requested by the auditor. The committee recommends that the issue remain unresolved and that the accounting officer submit to this assembly the cash book and reconciliations within a period of 90 days upon adoption of this report. The balance includes two deposit account balance held in Cooperative Bank and Commercial Bank of Kenya with unsettled and represented check amounting to 23,716,953 and 9,764,398 respectively, which was stale and had not been reversed in the respective cash books. The management responded that the observation by the auditor is true. However, the stale checks had since been reversed. The committee observed that the detail of unrepresented checks were not being provided. The committee recommended that the issue remain unresolved and that the accounting officer submit the detail of the presented checks within a period of 90 days upon adoption of the report. The county executive had 16 bank accounts which were dormant and had nil balances as per the bank statement as 30th June 2020. But no evidence was provided to explain why the management continued maintain the accounts which are not operational. Bank balance certificates for these banks accounts were also not available for review. The management responded that the observation made by the auditor at the time of audit is true. However, the account has since been closed. The committee observed that evidence of closure of account were evidence of the closure of the account were provided. The committee recommends that the issue is resolved. Cash books, bank records, cash books, bank reconciliations, board of survey, certificate of bank balance in 83, bank account operated by the health facilities in the county were not provided for audit review, and the account balance for these banks were not included in the financial statement. The management responded that the observation made by the auditor at the time of audit was true. However, the documents had been delivered to the Office of the Auditor General for review, and further that the primary health facilities are not collecting cash as or charging fee for services due to agreement between the Danish government and the government of Kenya, which provide donor funding, DANIDA, as user fee, and therefore the primary health facility are exempted from charging user fee, and the board of the survey, and that the board of survey forms may apply in this case. The committee observation observed that samples cash book from health centers were confirmed by the auditors. The committee resolved that the issue was resolved. Further, the bank balance in the following bank account held by the county executive of Kisumu were not disclosed. COVID-19 response, Kisumu County, SBM Bank, Jaramogo Diga Teaching and Referral Hospital, KCB Bank, Jaramogo Teaching and Referral Hospital, Retention, KCB Bank. The management did not respond to this issue. The committee recommended that the issue remain unresolved and that the accounting officer submit to the assembly satisfied bank balances of the three accounts at 30th June 2020 within a period of 90 days upon adoption of this report. Payments of payments in banks but not yet recorded in the cash books amounted to Kenya shillings 9,252,620 from Kisumu County deposit account as per the bank reconciliations settlement provided. There were no explanation on why the transactions were not posted on the cash book. The county did not also maintain a check register for tracking the movements of check issue. The management responded that the observation by the auditor was true, but the same had since been posted in cash book. The committee recommends that the issue is resolved. However, the committee further recommends that going forward, the accounting officer must ensure regular update of the cash book and reconciliations as required by Section 90 of the Public Finance Regulations 2015. During the year under review, 3 banks accounts, namely Kenya Urban Support Program account, Kisumu Devolution Support Program account, and COVID-19 response account were opened, but the letter of authorization to open the accounts were not submitted to the Office of the Auditor General and Controller of Budget as stated in Regulation 82.5 of the concern of the public finance management, that is the county government's regulations 2015. The management responded that it is true that the letter of authorization to open these accounts were not provided at the time of audit and that the same were provided at the time of deliberations. The committee observed that the letter of authorization to open the bank account were yet to be provided, even at the time of committee deliberations. The committee recommends that the issue will remain unresolved and that the accounting officer submit to this account the evidence of submitting the letter authorizing the opening of above accounts to the Auditor General and the Controller of Budget as required by Section 82(5) of the Concern of the Public Finance Management Regulations 2015 within a period of 90 days upon adoption of this report. 5. The cash balance amounting to 54,654,600 as at 30th June 2020 were held at 4 locations. However, no board of cash survey certificate were provided for audit review. The management failed to respond on this issue. The committee recommends that the issue is resolved. However, the committee further recommends that going forward, the accounting office must ensure board of survey is done and cash and survey certificate is kept to support the balance reported in the financial statement. Inaccuracy in statements of cash flows. The statement of cash flow reflects an increase in account receivable of Kenya shillings 96,635,084 and 84 Kenya shillings, which differs significantly with the actual movement in account receivable of 668,505,761, which was a decrease from 780,346,771 as at 30th June 2019 to Kenya shillings 114,831 and 10 at 30th June 2010 as per the statement of assets and liabilities. Consequently, the accuracy of the statement of the cash flow could not be confirmed. Management. The figure of Kenya shillings 96,635 and 84 represented as an increase in account payable was erroneously and was corrected in the financial statement 2020-2021 under the note 16 prior year adjustment. Committee observation: there was no evidence of prior year adjustment that was provided for the verifications. Committee recommendations: that the accounting officer submit to this assembly evidence of prior year adjustment within a period of 90 days upon adoption of this report. That going forward, the management must ensure that the financial statement represent a true and fair position of the county government. That this matter remain unresolved. Unsupported accounts payable, deposits, and retention. The statement of assets and liability reflects account payable, deposit, and retentions balance of 27,768,566. However, no schedule was provided for audit review to confirm the entities or firms that the amount related to. It was not possible to confirm that the payments had been made after a year and for projects that had been handed over, and the retention period lapsed as there was no record of the same. Consequently, the propriety, accuracy, and completeness of the account payable, deposit, and retention balance of Kenya shillings 27,768,560 at 66 at 30th June 2020 could not be confirmed. Management response: the schedule for Kenya shillings 27,768,566 supporting the figure relating to deposit and retention have been provided. Committee Observation. The management failed to provide the schedule on retention and deposits during the time of audit. The schedule have since been provided and confirmed by the auditor. Committee recommendations that the issue is resolved. Prior year adjustments, as disclosed in Note 25 and as reported in the previous year, the statement of assets and liability reflect a prior year adjustment of 6,737,153. That is year 2018-2019. Year 2018-2019, 8,422,611,821. Debits which has not been supported with journal vouchers or explanations of the error as stipulated in the reporting template and the International Public Service Sector Accounting Standard. 3, accounting policies, changes in accounting estimate, and error. Para 5, consequently, the accuracy, validity, and the completeness of prior year adjustment of Kenya shillings 600,445,737,153 as at 30 June 20.
Yes, Honorable Were, just submit Honorable Ken. Honorable James Were.
Thank you, Mr. Speaker. Mr. Speaker, there is no quorum in the House.
Honorable members, the honorable member is raising that there is no quorum. The whip is there. Maybe you can count the number and tell me whether there is quorum or not.
Thank you, Mr. Speaker. There is no quorum.
Honorable members, I want to refer you to standing order number 33. And I quote that if at any time after the chair is taken or when the county assembly is in committee or a member objects that there is no quorum, the speaker or the chairperson shall count the county assembly or the committee as the case may be, and if on the count under paragraph 1 a quorum does not appear to be present, the speaker or the chairperson shall cause the division bell to be rung as on a division, and if no quorum is present at the expiry of the 8 minutes, if the speaker is in the chair, the speaker shall adjourn the county assembly until the next sitting. So I want to request the sergeant at arms to ring the quorum bell for 8 minutes. Honorable members, when the quorum bell is being rung, no member goes out. Yes, Whip, can you confirm if you have quorum?
Thank you, Mr. Speaker. Mr. Speaker, there is no quorum.
Honorable members, I want to refer to Standing Order number 33, which I referred to earlier, part 2A of it, which says that if on the count on quorum does not appear to be, if the count under paragraph 1 was talking about the number. If the quorum does not appear to be present, the speaker or the chairperson shall cause the division bell to be rung as on division, and if no quorum is present at expiration of the 8 minutes, then the speaker, if in the chair, shall adjourn the county assembly until the next sitting without putting question. And in that order, honorable members, I direct that the House is adjourned until Tuesday the 13th of June 2023 at 2:30 p.m.